What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Supermicro computer stock, ticker symbol SMCI, on a variety of time frames in anticipation of the next trading day, Tuesday, March 26th. Alright guys, Supermicro computer here today up $70.05 per share. That's plus 7.2%. Of course, JP Morgan overweight rating here. So let's take a look at this name after today's monster day and use the data, the psychological levels, the options bias. Then at the end of the video, we'll take a look at expected move and try to understand this thing day to day just a little bit better. Let's get started here with our daily ritual, the volume profile analysis, to get a little bit of volume profile bias on the 5-minute chart. So the moves I'm primarily interested in here today on Supermicro. Yeah, that obviously, that move off the open. And then I'm interested in that little bit of a fade that we got off the intraday high. Let's take a look to see what the volume had to say here. Now, listen. Contextually speaking, we typically expect that first candle. It's very common to see that be the highest volume bar on the day, and then we get a quick fade. There's no way around it. There's a very obvious, pretty large bullish bias here off the open on that push. Okay, now the volume profile is like another layer of the onion, right? Believe it or not, we'll actually see moves like this, and then sometimes, this is just in any stock now, sometimes we'll see the volume profile actually lean bearish, right? It's bizarre, but it's another layer of information that I think we need to have to truly understand the move better and truly understand what the overall sentiment is, just that much more. Today here, though, the volume profile very much so agreeing with the price action. Now, that intraday little fade that we got off of the intraday high, you know, there is a little bit of bearish bias to a much lesser degree, okay? But it is out of context. We saw a few out of context consecutive bars on that push, so there is a little bit of bearish bias there. Just understand that on that intraday pullback from the intraday high, all right? Let's move on here to the psychological levels that we're likely to see a lot of traders making decisions around as we move into tomorrow. I'm paying very close attention to this. So let's start here on the 30-minute, and you can see my charts are very simple because all I want are those self-fulfilling prophecy levels that have the most eyeballs. That white line's the 50 period, that gray line's the 200 period, and you can see here. Today, Supermicro did a couple of really great things, at least if you're a bull. It utilized that 50 period that was, you know, just happened to be under the 200 period based on where it was trading currently on the 30-minute. It used that 50 period as a trampoline to push through the 200 on high volume, a forceful move, and spent the entirety of the day above those levels. Now listen, I know that if you're in chat rooms tonight, maybe you're in our free Discord, someone, if you're talking to them about Supermicro, somebody's going to look at this crossover and say, wow, a golden cross on the 30-minute. Listen, it's overhyped. The only reason I care that this crossed over at all is because it puts the 50 period, which is the quicker moving average, it puts it closer to up underneath the stock. It adds a closer psychological barrier, you know, like against a backslide, so to speak. And if I'm a bull, after a big upside move, one of the biggest problems is that the stock is kind of seen, at least for a couple of days, as trading on thin air a lot of the time. So I want as many psychological barriers getting upside underneath as quickly as possible. Okay, so that 50 period tomorrow, not only, of course, would I want to see that hold upon any retest of it, right? But really, two things. I want it to move high as possible, getting up close to that stock price, adding a psychological barrier so that a retest takes as little backslide as possible. This is, of course, from a bullish perspective. And, you know, along the way, that 50 period reclaims $1,000 a share and puts a psychological barrier ahead of a psychological level. That's not a bad thing if you're a bull, all right? Bears, you guys here tomorrow on the 30-minute, you want to see an aggressive downside move out of the stock, and I understand that sounds very obvious, but not only for the reason of it being a downside move, but also because it would drag that 50 period, at least force it to level out, and depending on the severity of the fall, it may force it to curl over and get back down below $1,000 a share. Okay, and you guys want that below 1,000 because 1,000 is kind of your enemy, bears. You want this to be a 3-digit stock and spend as little time above 1,000 as possible. But more on that in a little bit here. Let's take a look at the 4-hour chart. You can see here that today as well, we reclaim the 50 period here on the 4 hour. Now the stock is, it's only about a 1.6% move to the downside away from that 50 period. So, bulls, any retest of that, going to want to see that hold on as much volume as possible. But bears, your primary objective here tomorrow now is to reclaim that 50 period on the 4 hour chart as at least a short-term resistance level, which means getting down through it on high volume, retesting ideally on low volume, on falling volume, and then confirming it, rejecting lower, right? Confirming that level as a shorter-term resistance on big volume, on the rejection, right after a lower volume retest. Now, the most important chart of all, the daily. Okay, this isn't going to show after hours movement. That's okay. But listen here. The daily is the most important because it has the most eyeballs. Those moving averages are irrelevant. The nearest one is the 50, and it's below $800 a share. So what are we looking at? Well, tomorrow is a very obvious day to me. Tomorrow is the battle of 1,000 and 1,100. Okay? Bears. Any upside test of $1,100, which currently the stock is approximately, 5.5% away. We have to consider that. We've seen Supermicro do some crazy things lately. It's a volatile name as of late. We have to consider both of these numbers, right? Any upside test of 1,100, and you want to see that reject as hard as possible on as much volume as possible. Ideally on more volume than the test occurred on. Because bears, your objective is to make this a 3-digit stock yet again, which means breaking through 1,000 to the downside on big volume. Bulls. Any test of 1,000, any backslide back toward 1,000, objective number 1, hold that on big volume. Now the continuation objective, crack through 1,100 or at least make a test of it. Right, again, it's a 5.5% move away. It's not a tiny move, but that would be a beautiful thing, would be to break 11 and reclaim an additional psychological level the day after we just reclaimed a huge level of 1,000. Okay, break up through 11, retest it on lower volume and hold that thing on as much volume as possible, and we want that to occur ideally as early in the day as possible. Just understand though that a hold of $1,000, being that this is a macro level break, just a hold of 1,000 is still a beautiful scenario if you're a bull, because today it's just the first day break. All right, now expected move on SMCI here tomorrow. Well, we see here that the nearest expiration is Thursday. That's March 28th. And the expected move being priced into the chain, remember, this is the volatility expectation by being priced in by real participants, is plus or minus $76 a share. Okay, that's by Thursday's close. Now, being that there's no earnings or anything in between now and then, if we were to look at that and divide by 3, okay, the market's pricing in about plus or minus $25 a share per day, assuming a 3-day green streak or a 3-day red streak. Now, the more probable scenario is that we get a mix of the two, right? Whether it be 2 green, 1 red, 2 red, 1 green, whatever it may be. If we see a mix, then the volatility ends up being more per day because you have to make up for the 1 or 2 on the other side, right? But understand that currently, as of right now, and this changes day to day, by the way, that expectation from right now to Thursday's close is plus or minus $76 a share. Now, all the analysis we just did, plus one more thing we're going to throw in at the end here, helps us determine what is the market's directional bias. Okay, and then we look at, but that's not the only story, right? We have to know what's the volatility expectation, especially if we're playing options. There's no edge unless we understand what the market's expecting in terms of volatility. And then we say, okay, do we have a directional bias? And then how does our volatility expectation, our personal one, how does that compare to the markets? So if you're someone who thinks like, okay, by Thursday's close, I think we're going to be a lot more than $76 a share up or down from where we currently are. Well, then if you have a strong directional bias, you're someone who might look at that and say, okay, I want to purchase contracts. Because you think that realized volatility is going to be higher than expected volatility. That's a benefit to purchase contracts, of course, assuming you're correct directionally to begin with. On the flip side, if you're someone who thinks that there's no way this thing's moving $76 plus or minus by Thursday's close, well, then you expect realized volatility to be lower than expected volatility, which means that you're likely someone who wants to sell to open contracts or maybe trade some spreads to fit your directional bias, or maybe some directionally unbiased or neutral, or I suppose spreads. like an iron condor or something of that degree. Now, what's the directional bias out of the chain? All right, we can look at that actually. 167,000 total contracts traded today, 101,000 calls, and 67,000 puts. So we are seeing a call side bias on the overall ratio. And if we break it down by the short-term bets being placed, that's 0 to 20 delta range. This one flips 31,700 calls and 38,800 puts. Okay, so the overall ratio is rather call heavy. But when we break it down by short-term bets being placed, it's actually a slight put bias. Not as much as the overall is a call bias, but we are seeing a slight put bias in the short-term speculators. Listen, if you like that information, I highly encourage you to take a look at the Roensch Capital Gold server. That link in the pinned comment will allow you to get grandfathered in at the current rate. That's where I spend all of Market Open every single day. Been doing so for over 3 years now with our group. Take a look at the different membership options, a ton of benefits to be had. Please, if you got value out of the video, leave a like on the way out. I appreciate it, and I'll see you in the next one.